Hello, friends. Today with us we have Mr. Jateen Trivedi, who is Vice President and Fundamental Analyst for Commodity and Currency at LKP Securities Ltd. He is a regular on various business channels like Z Business and CNBC Hours, and he shares his outlook on multiple publications like Business Standard, Mint, and other various publications. Hello, Jatin. What should investors do since gold prices have touched all-time high and are above 60,000 mark?
Hello Karthik, thank you for the warm welcome. And now the investors, those who are looking to position themselves into the gold, should be holding to their gold long positions in any of the format that they are holding, either electronic or physical. So as the markets are not giving good returns into the riskier markets, if we take the example of equities from last year 2022 March till date today 2023 March, we have seen the markets have given a flattish to negative kind of a returns to the investors if we go from the base index return wise projection. And now if we compare it to the gold prices have risen around about 15% from last year, and it has been giving a strong return since last few years. So I think investors should be holding to their position. As the prices are looking bullish for this year as well, we can expect the prices to touch the levels of 65,000 to 66,000 as well, as the markets are looking a little bit choppy. And onto the bullish side, we can also expect targets of even more than 66,000 as well.
Will the domestic prices of gold be impacted due to the depreciating rupee?
Karthik, onto the rupee front, when we see the rupee depreciating, the gold prices in MCX becomes in fact more expensive into the domestic market, as the rupee depreciation does not help when we are importing the gold. So it becomes a little bit more expensive for the government to import the gold. Hence the price into the MCX and the domestic prices are reflecting the same, and we have seen that performance in the domestic prices as well, because in the COMEX, where we have seen the gold prices appreciating around 10 to 12%, in MCX we have seen a rise more than 15% because of the depreciating rupee. So the rupee correlation with the gold is as simple that if the depreciating rupee is going to further keep on falling, then the gold prices will be supported into the domestic prices, and the prices will keep on escalating higher.
What modes are available to invest in the precious metal other than the physical form?
Karthik, these days gold ETFs are much into the favor, where the reflection of gold is directly correlated with the pure gold. And then we have the MCX electronic format contractual basis, where we can take position onto the long side and convert it to the delivery format, which gets converted into the multiples, whichever you consider. Then we have the sovereign gold bond, which the government has started since last few years, which has taken a massive jump because they are giving 2.5% interest returns also in that, without any depreciating or appreciation, whatever happens in the gold prices. But 2.5% interest will be given to the investors. So I think long-term investors should be taking that as an option for investment with sovereign gold bond, as their portfolio should be evenly balanced with gold prices appreciating these days.
What's your take on the Fed's policy and interest rate cycle impacting prices of gold?
Federal Reserve has played a very pivotal role into the prices of gold since last 1 year, as the interest rate cycle has started to rise in. Since last 1 year, we have seen the US interest rate scaling very much on the higher side, from the 0.50 interest rate to now we are at 5%. But gold prices have been sidelining these things, because we have seen the Russia-Ukraine conflict, which has given inflation a strong rise. And to batter the war against the inflation, the investors have been parking their money into the gold. And secondly, the interest rate cycle, which is now looking at a peak, where 5% interest rate is too much, because there are banks which are failing, there are crises which is happening. So I think the interest rate cycle should be taking a pause in the near term, and then the gold prices are going to react very positively for that, because interest rate depreciating, by that I mean quantitative easing, will definitely help the gold prices going ahead, as we have seen in the year 2020 as well. At the time of pandemic, when quantitative easing was there, at that time as well, gold prices were scaling very strongly on the higher side. So I think this interest rate cycle going into the easing mode will definitely help the gold prices going ahead, and the quantitative easing will definitely help the gold prices.
Thank you, Jatin.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing. The securities quoted are exemplary and are not recommended.